Okay.
Richard, there's one category of entrepreneur that you haven't touched on, and that is the sole proprietorship.
Well, I was just going to ask that, Richard, but thank Richard came in because, again, on the SRTC, a sole proprietor could get 20% and a limited company got 35%, as I remember the rules. Is there one for sole proprietors?
Yes, there is, and it turns out that the amount of money that a sole proprietor can get through SR&ED is limited to roughly about 20% of what the Canadian-controlled private corporations
So it's still
get.
the same way, it's still approximately the same proportion. But that could be worthwhile, that you don't go through all the expenses of incorporation and all the rest of the stuff.
No, if you're going to spending more than a few $1,000s, you're well advised to get to have an incorporated company make the
for the
expenditures.
SR&ED.
You're going to more than cover off your incorporation costs and very, very quickly, because, as I said, you're only going to, as a sole proprietor, you're only going to get about 20% of what a CCPC would get. So incorporate and then spend the money.
Okay, but one of the problems with incorporated spending the money is that if you don't become profitable, I'm just playing with you here, if you don't become profitable, you only get to write off 50% of the losses against any other income as an allowable business investment loss. If you're a proprietorship, anything you lose gets written off against your other income. So again, depending on the extent, because this is a mathematical throwout, right? Because if a guy lost $100,000 in his proprietorship, and he made $100,000 as his job over here, the two of them balance themselves out.
Yes, that's right, David.
So if he's making $100,000 and throwing the money into a corporation, and the corporation gets $40,000 worth of scientific research tax credits, the other one would, he'd only get, what, $8,000 the other way?
No, the Canadian-controlled private corporation would...
Well, let's say he gets $40,000.
Well, it's just...
Because you can't claim, his whole loss can't be SR&ED. Some of it's going to be for lunchrooms, and his expenses are going to be, there might be a receptionist. That is not going to be part of SR&ED, is it, or is it?
The receptionist is not.
No. And the accountant, is the accountant for doing the,
no.
That's not part of SR&ED.
No.
So the SR&ED part of the loss is only going to, it's not going to be the whole thing.
That's right.
So again, I could make a good argument that you would be better off taking less money SR&ED if you're not successful.
That's right. Yeah, especially if you had a lot more other ancillary expenditures which were not SR&ED eligible. Those would be marketing expenditures, financing, HR.
Okay. So how about this? I mean, I'm going to stretch your limits. Remember, you were talking, the start here, you said we might have trouble with doing 10 minutes on this, right? You're just having fun. I haven't even got around to your sex life yet, so we're in good shape. Well, now I've forgotten all about it. The thing about this, anyway. How about we have a proprietorship? I'm a proprietor and I do something, and I decide to do some scientific research. So I set up a separate little corporation, and all that corporation does is the scientific research and development. That's all it does for my proprietorship. So all my proprietorship, everything else is over here. I'm selling widgets or something, and over here I set up a little scientific research credit deal because I'm going to try and develop a new method of making widgets or a new widget or something that does the job 3 times better than... Can I have a little corporation for my scientific research and run my other business over here as a proprietorship so I can make my mortgage deductible and stuff?
That's a very good thinking, David. It sounds to me like that's quite plausible. So you'd make sure that the company incurs the SR&ED, clearly SR&ED expenditures,
that's the SR&ED.
And have the sole proprietorship spend all the other money.
Yeah.
Write that off against the personal income. The sole proprietor's income.
Because since you can only, you've sort of got to separate it out, and that would even make it easier because now you've got this clear delineated company and bank account, and that's what I'm doing my research. And if I buy a computer to do that part, that goes into that company, and if I hire somebody, an engineer to do that, that's his salary is paid by the company. And that's all he does.
Yeah.
Or she does, or whatever.
That's right.
So I could do that. All right. Now, how much money are we talking about here? I mean, you worked for the government for 4 years, and then you went into private practice. Is that what you did?
That's right. Now I help high-tech companies apply for the SR&ED money.
And then you did Sierra, PMC. You did all their stuff for a couple of years, as I understand? Or?
Yes, I did.
And I won't ask you how much money you got, but is that a public knowledge, something of that, an SR&ED? Is it?
No, it's not.
It's not part of public documentation.
No, the amount of money that PMC Sierra received is not public information, or it's not published information, except
But
in the
in
case
an
of
annual report.
It will be. It is in. It has been in previous PMC Sierra annual reports. But you asked me how much money is involved. The answer is roughly about $4 billion is paid out through SR&ED in Canada, $3 billion in federal investment tax credits, and the other $1 billion in provincial investment tax credits.
And that's amazing. And does every province have a SR&ED tax credit, or just
yes?
BC and
Now
Ontario,
every province has it. For quite some time, Alberta didn't have a provincial top-up. Now I understand it has. This is a recent change.
Okay. And how many companies would you have dealt with so far doing this? I mean, that's sort of private information. But
me personally?
yeah.
Well, I've assisted over 110 companies receive SR&ED money. There are roughly 1,500 to 1,700 BC companies that apply every year, and roughly 10 times that across Canada.
Amazing.
Every year. This is an annuity, David. It just keeps coming. As long as you spend money on technically difficult things, you're going to get a government check year after year after year.
Okay. But I have to be risking something. I have to be trying to do something new, and I have to be doing something that doesn't necessarily have a guarantee of success.
It must be technically risky, David. Not risky from a business point of view or a marketing point of view. The technicians must not know whether they can achieve the goals that you've set for them. Because of technical uncertainties, not because of whether the market's going to adopt the ultimate product.
Well, there's a problem with techies. Richard's already laughing because I know he knows exactly what I'm going to bring up. You ask a techie or you ask somebody, can you do this? And the guy says, oh yeah. But he doesn't tell you it's going to cost $100 million and take 13 years. Is there something that people can use as a sort of a guideline to where it gets into the technical risk or something of that nature? I mean, let me use an example. I'm just going to play games with you again.